I'm going to be talking about a futures trade that I did, and it started during the overnight session and ran into the next day, right? And I'm tracking, I put out the tracking of, the comments that I made throughout that. But the first thing I wanted to talk about was the setup, for this trade. And so let me go through the slides here. Okay, so this is actually before or actually after I had been in the trade already. And just to let you know, these are swing trades, okay? and I put on, the micro contract. So I use MES and MNQ contracts. They're very, very small contracts, okay? And what I do is I add, to them as a trade goes on. And so looking at this right now, this is a, pretty much this is an hourly chart, and I use a lot of the hourly chart on these trades, okay? And it gives me a perspective because it doesn't allow me to get shaken out. And the most important thing is to know in trading futures is where the trend is, the most important part. And if the trend is higher, going up, that's better, okay? Because markets generally tend to go up all the time, and most of my trades are long, okay? They're not short. In fact, I take most of my losses, going short. And the other thing I do with these is that I give them very, very wide stops, all right? And I'll show you the stops basically are like 50 points on MES and about 150 points on MNQ, right? Because MNQ really, really is very volatile, but it gives you, it makes you a lot more money, too, all right? and because I'm confident that the trend is up, and I'm trading very, very small positions, it doesn't bother me that we go down. So you can see here during the overnight session, we took a 50 point drop, right, overnight. Okay, but it was still within that consolidation trade, and I think that my stop was actually at 37.50 on this particular trade. Okay, and more, like I said, on MNQ. And so the setup was this. After the overnight session, I did take a look at the pattern here. Okay, and this is just a pattern that happens, and it repeats itself over and over and over again, just making this trade very, very easy to manage. Okay, and so you see here, this is the A portion, the B portion here, and the C portion here, right? So these, I pick these areas here because it's a 38.2 or less distance from the A leg to the C leg. Very, very important, okay? Because you don't want to have a C leg up here thinking that you're going to get a big, big gain, right? These should be pretty close together, and that's very important when you're putting together an ABCD pattern, okay? So after we found the bottom here, right, and it was in now the next day, you can see here that we formed a consolidation pattern again, in the same area, and I'm going to show you a different chart too now about MES that occurred early this week or last week. I can't remember when, but the very, very important part, the very important level in this trade was 38.53. That's the area, if you remember early in the week or last week, that the market dove down. Okay, it couldn't break that area, and it dove down, and I'll show you the chart of that. So it's very, very important to understand support and resistance areas in this. And you see the white lines here. The white lines are basically IB levels. And that big white line on the top there is an IB level from, and I'm pretty sure it was from last week. Okay, and I keep these around because even though they're daily support and resistance levels, they are support and resistance levels. Okay, and that's why I use them. All right, so let's go on to the MNQ area, MNQ trade, okay? And this one here, you can see that I could have gone down here, right, to put on the A leg, but it was way too far from the B leg, okay? So I used this area here, and that's perfectly fine. You know, why? Because other traders like myself will do exactly the same thing because they know they can't, you know, they can't have these way too far apart, right? And the next candle here was was actually higher, okay? So I use these two to give me the level. And this chart here, once we broke out of this consolidation area, again, we broke out here, right? I knew that was it. This thing was going to go up. And then I also look at other indicators where I look at the NASDAQ and the S&P 500 volume weighted advanced decline line. Okay. And that's in Thinkorswim. You can put that in. All right. And I use those two to see if there's, you know, more buying or more selling. Okay. And obviously if I'm trading, I like to, I like to know that we're more in a buying mode than a selling mode. Okay. All right. And so the next slide here, let's see. Yes. So this is the slide that I'm talking about. This level here is the 38.53 level. This is the level that it broke here, and you can see that it just banged, right? This was the IB level on, I can't remember what day. It's not here, but anyway, it's from a while back. And this thing bounced off it. Eventually, it's going to break. Because just to let you know, there's a double top, but there's not a triple top. Okay, triple tops are broken, readily broken in when they get back up there. Okay, so a double top you can trade off of, but triple top it usually breaks out. So this was a false breakout. So we broke here, but it went right back to the support. Just one candle, and this is a what is this? A 5 minute? I can't remember. No, it's an hourly chart. So it broke the candle, it broke, and then it went right back down. And I knew that day that if we're not going to break this, we're going to go down. Okay. And it went down. And that's why I think on that day I took off a put credit spread. Didn't want to deal with it. Just because of the risk of going down. Okay. So we went down, back up. Here's other IB levels. And then we went back to this area here, and this is where we broke out again. Okay. So just want to give you a little bit of history that I track, right? And knowing these levels, and they're very, very important levels, right? Okay. And then the next, these are, and for those of you who don't trade futures, this is in the futures channel, right? And this is from this history here is from the trades itself. And so it started again from the night before. You can see at 11:30, I went to bed. You know, I had my stops in, I let it go, and then this is what I basically communicated. Now I don't, you know, sometimes I use automated stops, not stops, yeah, automated. What do you call them? Stops that go up. You know, they keep going up automatically. I can't remember the name now. I don't know why. But anyway, but I like to manage it and control it, because as the market goes trailing, thank you very much. Appreciate it, Robert and Leslie. Okay. Every time that the market you know, goes up, right, it kind of retraces back, and those retracements are actually support areas, right? And that's where I move my stops to under those areas, a couple you know, several positions further down than those support areas, to give it some room to keep going. All right. Now, as the market continues moving higher, and I'm going to show you you know, I'm going to get into the actual chart itself. As the market goes higher, I start tightening those stops. Okay. And the reason is because the higher it goes, the more risk it's going to have a pullback. Just like you know, the larger market, you're looking at the daily, the same thing happens. Okay. So as the market goes higher, we get into a more risky position. And so I tighten my stops as it goes up, right? But I knew, because we were so close to taking out the highs, that we would probably take out the highs of the market. Okay, let me see. Okay, so that's this last slide. I'm gonna shift this here. Let me close this, and then I'm going to go back and show you the actual chart as it was going up. So let me share that. Okay, I'm just going to share my screen here. Okay, and so this is I didn't have time to change back the MES, but let me do that. Okay, and let me put that on the 1 minute so you can see what happened throughout the day here. Okay, so yeah, here's the high when it that's actually today. Okay, so here you can see here now. Let me widen this a little bit so you can see that better. Take this back. Okay. Yeah, because I want to show you yesterday what happened here. Okay, so you can see here, right around here, this is where a lot of times at 2 o'clock things happen. 2 o'clock, 3 o'clock, 3:30, 3:45, 3:50. Those are times that the market tends to make pivots and change. All right. So after 2 o'clock, it was steady here. Now I had my stop, because we hadn't gone up a lot. I had my stop, probably break even at this point. Okay, and you can see here where the market goes down, and this is so typical that it just goes down because it wants to take out the stops. It takes out the stops, right, and it just loads up. These traders load up on these stops because they love it. They just add more to their positions. And by this time, I already had 3 contracts on MES and 3 contracts on MNQ. Okay, because I had built them up, right? But the stops, the stops were above break even, so I couldn't lose on this trade, and that's the beauty of it. So it takes all the emotion out of it. Okay, and so this dip is so typical in the afternoon that it happens. They take out the stops and it goes right back up, and you can see here it went right back up to the support level. That it was managing, that it was trailing here. Okay, then we got a new high. Boom, broke out. So after this happened, I put my stop under this area here, okay? Because a lot of times it'll go right back down to this area, so I wanted to be clear of it. So once it broke out, right, and moved up, now I started putting my stops closer and closer and closer, and you can see from what I was communicating to everyone, right? We got out pretty much. Actually, I closed it at 4, so we got out here, okay? Big gain. It was a big gain. Actually, between the two positions, it was $1,000 gain in micros, and I had 3 contracts each. Same thing here for, this is 4 o'clock in the morning. Okay, so same thing here for this guy, right? Here it is. Big move up, and this one was actually, I was able to take it out right about here, actually. When I took it out, and it went down and went back up, but that's okay. I caught most of the move. So that's basically how I placed it. At the beginning, just keep in mind, right? Very wide stops. I let the trend do the trend thing, okay, and let it, just let it do its thing. And then once we go above break even, then I start looking for a break even stop, okay, so that we can't lose on the trade as the trade progresses, okay. And remember, this is a directional trade, and so you have to be aware of the trend, support and resistance areas. A little more complicated than 7 DTE. So once it started moving, keep in mind that I tighten the stops. I get them tighter until finally I didn't close the trade. I let the stop close the trade, and that's how I managed it. Okay, so that's basically it. I don't see any questions here. If you have any questions, let me know, and I'll answer them. But it's pretty straightforward, guys. And if you trade, you know, and if you do trade futures, get on micro futures, go to a broker like Trade-Evate with very low commissions, and they allow you to use a very low margin as well. So just for MES, it's $100 per contract, as long as you day trade, as long as you don't let it go overnight. Okay, but and then MNQ is a little bit higher, but it's the same very low margin as long as you close out the trades at the end of the day. All right, so that's all I got. Hopefully this was of value to you. Hopefully I'll see you in the futures channel and help you out. And it's just a great trade for a retail trader, and it's going to get very popular. I can guarantee you. All right, guys, thanks a lot.